Hi everyone, welcome back to the channel. My name is Zari and you guys are watching Finance Square. In today's video, we're going to be looking at reviewing another venture capital is investing in cryptocurrency. Now, this venture capital is investing between $1 million up to $100 million per project. Now, they have invested in over 30 projects. Now, we're going to be covering for this specific video a company that's called Paradigm. So Paradigm has been investing in multiple cryptocurrency project. Now, if you guys want to decide what venture capital I'll be covering for the next video, you can obviously leave a comment, subscribe, like if you like this video, and obviously suggest me what other cryptocurrency venture capital I can cover and also give you my opinion. So we're gonna dive in and see what Paradigm has been investing over the past few years. So let's start. Paradigm has invested in over 30 projects. Now, they have invested in companies like Coinbase, Diem, BlockFi, Chainanalysis, Maker, Compound, and many more. Now, I actually try to measure the success rate of this venture capital, and out of the 30 that they have invested, I will say 9 to 10 companies can say they are successful, or they've been used, or they have a price metric. Therefore, for this specific venture capital, I'm giving them an average ranking of 30%, meaning 1 out of 3 of the projects I've selected is successful. Now, they have invested over the past few years in NFT project related, in DeFi, and obviously in infrastructure, blockchain company. So if you look here, you can see they have invested in multiple companies, some that you might already know. Coinbase, for example, Cosmos, Compound, Diem, which used to be called Libra, basically from Facebook, Fireblocks, for example, Maker, Numerai, let's see here, Uniswap, Zora, and Yield. Now, they are obviously trying to target and really stay relevant by investing in a DeFi project. You can see here Ember, for example, DeFi wallet, BlockFi, for example, which is a centralized DeFi in a way. So let's see what they have invested. So Yield is a bringing fixed rate borrowing and lending to decentralized finance on Ethereum. So if you click on this website, you're going to see the following interface. So you can actually borrow or lend DAI. That's it. Not so complicated. You can actually see if you were to borrow, let's say 1,000 DAI, you'll be paying 1.67% interest rate. So basically you have to return, if we're looking here at 1,016.7 DAI. So your fee here will be 16.7 DAI or $16.7. Now obviously if you want to lend, you can obviously lend, and if you click here, you can actually understand what will be your interest. So if you were to, let's say, to lend, here we're looking at 100,000, you'll receive in September $127 extra, which is pretty much not so high. So I think they're trying to be realistic, not over promise, over delivering. So they're giving very realistic of interest rate you can actually earn by lending your DAI. I think it's cute. Will I be using it? Probably not. Not so attractive. Now let's check the other one. So the other one, it's Zora. So Zora allows NFT creator to own their work and create singular on-chain market for each NFT. So when you go to their website of this project, this is their website, and it seemed to be okay. I've seen better websites. They were much more engaging. It seems that people are listing on this platform, but it doesn't seem to be there's a lot of activity compared to other NFT marketplaces I've seen. I think that the art are okay. I haven't seen some crazy art, but why not? Obviously, if you're a VC and want to have some action in NFT, you obviously want to invest in a startup that is creating a marketplace for NFT. And then they also have invested in Synthetix, which Synthetix is a protocol for issuing and trading synthetic assets on Ethereum. Now, if you're coming from the traditional trading platform or from traditional trading, you obviously heard about in the past maybe a CFD, more probably if you are in Europe, which stands for contract for different, which is basically it's a derivative. Instead of you trading on the real asset, you're getting exposure to the underlying asset. Or if you maybe trade on future option or one of those things, this is literally what they're trying to do. They're trying to create Synthetix or derivative on Ethereum. So if you go to the website, obviously they have here multiple liquidity provider. And if you see here, it seems they also get exposure to, I guess, oil and maybe even commodities, for example. Again, they also need to maybe work out on the regulation, obviously to get exposure to stocks or to indices. There's also going to be some requirement from a regulation perspective and some legal paperwork. But Synthetix seem to be the leading company, the leading project to push the derivative protocol on Ethereum blockchain. Now, and then you have BlockFi, which is provides the wealth management product crypto investor need, all powered by blockchain technology. Now, basically, in a simple term, BlockFi basically enable you to, on a centralized platform, to obviously to stake your cryptocurrency and obviously earn interest. Also, lend it if you want, and obviously earn interest. So this is basically what they're offering here. They give you like some calculator. So if you were to stake with them, you can actually, for 10,000, let's do simple numbers because we want to be realistic. So if you were to stake with them or give them 1,000 GUSD, you earn per year $106, which is equivalent to almost, I don't know, it's 10%. Or if you want to do it for 10 years, you will earn literally, you'll double your money, basically. At the end of the 10 years, you earn $1,060. You can also look maybe at Bitcoin, and if you have, obviously this is per amount. Let's just say here. Okay, so if you have here 1 Bitcoin over 10 years, you will earn in value, you're earning value 7,824, or in crypto you earn 0.24. Again, this is based on today value of Bitcoin. So it's actually very, very cool. So this is probably a platform that will be more likely to use because they have attractive interest rate for your cryptocurrency. And then you have Cosmos. So Cosmos Network is a new architect for application-specific blockchain. So Cosmos has been around for quite some time. There is some people that are using it. Again, it hasn't really won the whole audience or many companies from what I noticed. They're still trying to really gain the trust of the industry. Obviously try to lure in some project to build on top of their blockchain network. So this is what they're trying to do. So obviously they're trying to compete or to provide maybe a better solution for a marketplace or for custodian or for even maybe even DeFi project. So again, I think Cosmos still has a long way to go. Again, I do not understand anything about this company or technology wise, but I think that there has been around for at least 3 years or so, and they haven't really gained so much of their, say, of their audience. I think maybe people from the tech or the people or developer has really trust this project, but in regards to regular people, we haven't yet really got a chance to use it. And then you have Compound. So Compound is an algorithmic autonomous interest rate protocol built for developer to unlock a universe of open financial application. So this is where basically most of the staking interest has been created. and maybe this is actually maybe the original marketplace that actually created it for enabling people to earn cryptocurrency that are based on Ethereum. So I think this is super cool. Obviously you have some other project, for example Argent, which also I'm going to cover here, that are literally giving you a gateway or a simple way for you to use their protocol or their infrastructure for you to be able to earn interest for your stable coin, that are stable coin or any cryptocurrency is based on Ethereum. Then you have something called Amber. Amber helps clients access liquidity, earn yield, and manage risk across crypto asset. So this is Amber. So again, Amber is more tailored to institutional, not for me and you. You can even see here, basically trying to create a more traditional interface or more traditional tools for people that are used to invest in a traditional way for something not so traditional. So obviously, it seems that they also have already compliance, US FinCEN and Canada FinTrack. So obviously they have to do the KYC and AML. They're obviously targeting institutional. They're not here to target me and you. So they have traded over $500 billion since they went live. So they obviously have a relationship with high net individual or family offices. So this obviously is interesting if you are by any chance institutional and are looking for a platform to earn some interest on your cryptocurrency. And then you have Argent, which is the simplest and safest Ethereum wallet for DeFi. So the way I look at it, this is maybe your I don't know, maybe a Coinbase for DeFi for earning interest on anything that is based on Ethereum. So from what I saw, it's really simple. They're using the complex DeFi as infrastructure to enable someone that just entering this sector to literally just deposit the cryptocurrency. Obviously have to be Ethereum based cryptocurrency or DAI or USD, for example, USDT. And obviously just basically select on their option what sort of cryptocurrency they actually want to stake and earn interest. So I think this is really can really bring a lot of momentum to people that just got into the cryptocurrency and are not looking for the complex login from the MetaMask and Ether wallet. I think this is obviously can be a very interesting and simple way for us to obviously to earn interest. Now, this is all of the cryptocurrency that I felt that were quite interesting to cover for Paradigm. And I hope this video was very helpful for you guys. Until next time, bye-bye.